Now, for our final panel of the first day, we're going to build on the conversation from the first panel because it was absolutely in that conversation. And it's the way we designed the program was that we would like some reflections on that. And it's something that's a little bit new to Aviadev. So it was very much about, let's just connect the destinations, the airports with the airlines, etc. But of course, you can't do that without the access to metal, which has become more and more pressing. So to guide you through this session, we're going to have somebody with us who's moderated a session before, but slightly different. But they've got broad industry knowledge, a real strong track record supporting airlines, lessors, and financiers, but with a very much an African focus. So at ACC Aviation, Tristan Brouard's helped clients navigate everything from aircraft sourcing, asset management, finance structuring. So he is going to be your guide for this session. So Tristan, please join me on stage. Round of applause.
Thanks very much, Sean. Thank you. Good afternoon, everybody, and thank you for joining us. I know everybody's most probably got empty stomachs, so we'll try and keep it short, but it is quite an in-depth panel discussion that we're going to have with some really top industry leaders in the room. So I think John's done quite a good job at introducing ACC. We've been on the market for 20 years. And we provide bespoke solutions from ACMI charter to consulting, which involves business advisory and transaction asset management advisory as well. So I don't think I'm going to keep much more time going, so I'm going to welcome my panelists on stage. And we'll start with Abderahmane Berthe, the Secretary General of AFRAA. Miguel Carneiro, the CCO of TAAG. He's on his way. Linas Dovydenas, the president of IMEA for Chapman Freeborn. Raphael Haddad, president Jetcraft Commercial. And last but not least, Maarten Grift, sales director, Africa, Middle East, and CIS regions. I think it's clear to say that we are struggling in the market today. There's rising costs, there's supply chain issues, and there's financing hurdles, which is what we're going to discuss and see how we can overcome these or try and mitigate the future problems that we're seeing. Without further ado, Miguel, a question for you. Rising costs are a growing concern for airlines. Fuel costs, lease rates are going up, MRO costs are going up, as well as supply chain issues. How is TAAG structuring their finance side to combat these ongoing and growing issues?
Maybe I should get. Can you guys hear me? All right. Good morning, all. Thanks, Tristan. First of all, I'd like to address the fact that as an airline, we make the money and we pay everybody in this room. So we pay lessors, we pay OEMs, we pay insurance companies, we pay airports, and we are left with very little margin. So definitely we have to be very creative. And in the case of our airline specifically, we have adopted, first of all, we have migrated from the traditional ownership of metal to the leasing model. A couple of the lessors are even in this room, and like to extend our appreciation for their support. And the second angle which we have taken is really to reduce our distribution costs by migrating to a more digital distribution model for the airline. So going into the web, new website, reducing our GDS costs. So In our context, it's very complex in the Angolan context. We have to bear in mind that between 2017 and 2025, our local currency has depreciated 453%. And that accounts for 60% of our sales. So we have a serious problem. That has put pressure on the purchase power of the market. So we have to be very creative. So reducing costs across the value chain has been a strategy.
I think we're going to get to the topic of purchasing power and how we can get around that. But I think a topic is being able to be as flexible as possible as an airline and adapt to the changing markets. And I think a key element of that is the ACMI market. Linas, do you see African airlines adopting the solution?
Can you hear me? Okay. So good afternoon, everyone. African market definitely adopting because, as you said, there is a shortage of airplanes, there is a shortage of solutions, and the African market is definitely accepting ACMI. Only one issue, or not an issue, but only one difference, that in Africa, the ACMI solution is still perceived as a short term. And if airlines start to look for the aircraft to be delivered in 1 month, in the middle of a summer, for 2 months, so definitely prices are very high. And when everybody is talking that ACMI is expensive solution, that it's gonna not make money on it. So we try to educate, we try to talk to airlines, we try to talk to authorities, which also very much involved in ACMI business, that ACMI solutions could be strategically long-term planning solution, that you can have additional capacity many, many years in advance, 2 years in advance, 3 years in advance, planned and signed in advance for your peak seasons. So if we calculate, let's say, 5% out of total fleet of 29,000 commercial aircraft, so it's more than 1,500 aircraft available for ACMI. So half of it, it's for the airlines who flies only ACMI. White-tail aircraft could be branded by any airline, and remaining is some carriers which is branded also giving aircraft for ACMI. So there's more than 1,000 airplanes available for ACMI, and it could be planned in advance and used in advance for many, many airlines. So in Africa, it's getting to some of the airlines. We are very happy that we're starting discussions about strategic planning of ACMI, but it's still not there. So I hope in the coming years, it will be much more availabilities on that side from the airlines perspective, that we're gonna accept ACMI as a solution to generate more profit and to not have fixed costs during the low season. And at the end of the year, of course, it all reflects in the bottom line.
I think it's, from our perspective as well, we're seeing a lot of challenges with airlines being able to induct the ACMI solution. And this could be from structural to policy regimes, where airlines can't take in capacity quick enough to cover an AOG situation. Mr. Berthe, you've long advocated for cooperation and scale in African aviation. What policy or structures could we revisit to aid African airlines to induct solutions like ACMI or allow them to grow into their network?
Thank you very much for having me here. First of all, I would like to express my sympathy because I've been informed that one wide-body aircraft taking off from India to London crashed this morning. As the head of an airline association, I want to express my compassion to the airline, to the passengers and the families. Secondly, I want to react to give a different view regarding ACMI. ACMI may be a good solution, temporary solution for airlines. However, my view is that long-term ACMI is very costly for airlines. When you do ACMI during 4 or 5 years, you end up to pay the price of a second-hand aircraft. So we need to be very careful, and we know that financially, African airlines are very fragile. So I'm not seeing ACMI as a long-term solution for African airlines. Coming back to your question, we are in a very capitalistic business, airlines business, as you know. Airline needs capital to invest in aircraft, in technology, in infrastructure. And it's important for airlines to attract investors. And that is really the big challenge we are facing. How to attract investors? You need to have a credible, I will not say business plan, I will say strategic plan, because you need to have a vision to have a business plan. You need also to have an effective governance structure, corporate governance, and also avoiding some kind of external interferences. You also need to have a strategy in terms of fleet and network, and we are seeing in many situations that the fleet and network strategy are not aligned with the potential of the market. And the compliance with regulatory standards and the assessment of the operational risk of the airline is, for me, also very important. And lastly, I will say, the operational efficiency to ensure passengers' loyalty is also important. You can't have all the capitals, you can finance your aircraft. If your operation is not efficient, you will not get passenger, or you will lose your passenger. Secondly, financial performance and stability is very important to attract investors. You need to be transparent in your financial statements. You need to have a long-term sustainable financial plan to attract also investors, because they want to be sure that you can repay the loan at the end of the day. And also, I think that collaboration, equity partnership are also very important. We are in Africa very fragmented. It's very important to consolidate. There are some business case we are seeing where some African airlines are cooperating with other airlines to build equity, and this also can be a way to raise capital. And the good thing is that if it's coming from an airlines, then you have also a strategy with it, because we need a strategy, you need also a good vision. That's what I wanted to say to respond to your first question.
Thank you very much for that, Mr. Berthe. I think it's down to transparency and trust building. Maarten, a question for you, and it's more about how, from a lessor standpoint, how are you guys perceiving the risk, and what could airlines do to build that trust with the lessor? I mean, you guys are ultimately a partner with the airline. It's your asset, it's your investment, but it's also the airline's investment that needs to be taken care of. So how do you guys see the risk perspective, and what can they do to increase that favorability?
Okay, good afternoon, everyone. TrueNoord is a regional aircraft lessor. We focus on the 50 to 150 seat segment. So these include predominantly Embraer aircraft, ATR aircraft, so jets, turboprops, also Dash 8s. These aircraft types play a pivotal role on this continent. So we are very focused on the African continent. We have been growing our presence or our footprint on this continent for the last couple of years in terms of number of aircraft, but also number of lessees that we work with, and we will continue to do that. Having said that, there are some risk factors. Dominant risk factors include, and I think it was mentioned earlier already, the exchange rate to the US dollar, but also jurisdictional risk is an important one, and where lessors are looking at is treatment of maintenance. Now, summing up those three, I think airlines can really influence one, and that's probably the maintenance. The other two that I mentioned are very much under control of the government, if you like. We see improvement there as well in certain jurisdictions, but I think maintenance is one that the airlines can influence. Having said that, and probably the operators in the room know better than we do, but the maintenance is a challenging point given supply chain issues. Those supply chain issues were there pre-COVID, but I think since the pandemic they have increased, and we see that with turnaround times and also aircraft coming out of storage are causing issues, are not readily available to fly. So that is an issue for all airlines, but we are focused on regional airlines, and I think especially for regional airlines with smaller fleets, increased downtime, that causes significant problems. Now there is some things that airlines can do to mitigate that risk, and I think one of the first is fleet decision. It's very attractive to step into new and shiny metal, but probably we need to come to the realization that that's not for all airlines. The fuel saving or the fuel cost savings with new technology aircraft don't always are not always bigger than the reduction in capital cost if you go with current technology instead of new technology. I think that's one important one. Other elements is for regional airlines to open up international routes, so to get the US dollar currency in. It's something that we look at and that we definitely want to stimulate and see how we can assist with that. And then the last one I think is business development. And there's a good number of airlines in the room that have scheduled operations, but are also offering aircraft for ACMI or charter operations. In that way, you de-risk your business and become stronger in facing headwinds and tackle those challenges.
It's a good answer. Thanks very much for that, Maarten. I think let's build on that a little bit more. I think everybody wants brand new shiny metal in their fleets. Raphael, I think the market is tough. There's not a lot of availability on the market, and what is on the market is not so shiny anymore. How can African buyers position themselves in terms of being able to access these assets?
You're totally right. The availability of brand new aircraft is very tight right now, and you heard Mesfin mention this. Getting whether it's a wide body or a narrow body or even regional aircraft, it's very tough to get them. As well, and Tristan, you and I, your company, we worked together on few used aircraft transactions. So even used aircraft are not that available, whether it's narrow body, whether it's regional aircraft, and wide body. So across the board, and this is, of course, is a residue of the huge supply chain issues that actually were the consequences of the COVID crisis that we had. Of course, all that was multiplied by technology issues and was also exasperated by the human factor that resulted from the COVID as well. So how can we make it easier? Okay. Unfortunately, I don't have good news to say on used aircraft availability. If you want to acquire a narrow body, there is less than 100 aircraft available probably right now on the globally. If you want to put your hand on a used A320, it's not easy. You have to have a nice checkbook ready to go. Or if you're willing to pay the high lease rate, lessors have them. They can go and can lease them to you. You're laughing, Thomas, but so you can go to the lessor and they'll give them to you. Okay, they'll be happy to, instead of charging you $250 a month, they'll charge you $350, if not $400 or $450, right? So that's what we're living right now. So if you want to go buy a used A320, I was bidding a few days ago on a couple. The market value was around 14 million. I bid 15. I lost at 17. Here you go. So it's unrealistic. So I think right now, the first advice if you have a good business plan, good applicability for the product you want to buy, and you have been able to, whether you have the cash or you have the funding from a lender, you see an opportunity, don't wait, take it. It's okay, take it, because your business case, running your airline, is more critical than saving $500,000, right, on the acquisition cost. I also touched on business plan. This is something very critical, is to have a proper business plan, okay, that is valid, that's viable, that is going to be successful, because I have a relationship with ABSA Bank. We have a trading facility with them. One of my buyers last year wanted to have a loan from ABSA Bank. So he went and he submitted, and ABSA Bank said, I need a business plan. I need you to fill this application. Where's your story? Tell me why. Yeah. They didn't want to. They didn't want to tell the story. So you got to tell the story. And the best way to tell your story is by having a good business plan to support it. You need to show the bank that you are credible, you're viable, that they can bank on you, okay? Not only just that. I want to touch a little bit on the ACMI business. The ACMI industry is benefiting tremendously from the lack of narrow bodies or wide bodies on the market right now. And I tend to agree with Abderahmane. In ACMI, the reason why they charge us the high rate is because they are there when we need them, when the airline needs them. So to see it as a perpetual solution, it's tough, because the airline has to make money eventually. And when you do an ACMI, it's very good. It saves your whatever immediately. But on the long term, it could hit your pocketbook quite a bit.
Definitely. I think it's important that airlines, establish a trust foundation with their financiers. I think that's the pinnacle where we need to be. Before I flow on to the next question for Miguel, we've got a poll question, and we'll take 30 seconds to let everybody have a look at the question and answer it. If we can get the poll question up, please. All right, while they're getting the poll question up, we'll continue. Miguel, supply chain issue has been reverberated around this conference room, every other conference room, in board meetings between airlines, lessors, OEMs. How is TAAG trying to stay above the supply chain issues? Are there solutions that you guys are exploring? Are you restructuring fleets? Are you taking in ACMI solutions? What is TAAG doing with the supply chain issues?
The supply chain issues have been affecting everybody, right? And in our case specifically, the airline took a decision a couple of years ago for its narrow-body fleet to migrate from a 737 to an Airbus. And we made the choice for the A220. And we all know the issues with durability of the engines on the 220. So what we did, we revised our strategic forward plan, 5-year plan, 2024, 2029. And we really just revised the numbers and the performance numbers downwards, because we know that it will take time for the engine to mature, and therefore we're going to have to go with a backup plan. Our backup plan was initially, and we did tell the market that we were looking at the possibility to recycling out our 737 fleet. What we decided to do is really to extend the life of our 737 fleet, really to work as a backup and support when the A220s are going to go out. So that means obviously that we're taking a hit in our books, and that's how we are addressing that supply chain primary issue in terms of our airline. Overall, across the board, we don't have any massive issues that we feel that we need to address in a different aspect.
That's a good position to be in, I suppose. I think, that there's, as you mentioned, there's supply chain issues globally. It's not just in Africa. Now, what we typically see is, the likes of the more mature markets placing massive orders with OEMs, and those airlines are experiencing delays in deliveries, so they're taking in ACMI. And because they're not flushing out older fleet, which normally come into the African market, that obviously poses constraints to smaller tier airlines in Africa. Linas, have you seen a surge in requests from Africa in the ACMI environment because of the supply chain issues?
Yeah, many of them, yeah. So definitely many of them, but actually not only from Africa. As you stated, the shortage of aircraft all across the globe. Airlines extending the leases of mid-life aircraft. They're expecting to delays in brand new deliveries. So the shortage of aircraft is everywhere, and definitely ACMI is benefiting from it. Nevertheless, exactly that discussion we have now, I want to come back to my first question, when everybody perceived ACMI as an expensive solution. And as I said, it's expensive when you say, I need aircraft tomorrow. But we all have seasonality in aviation. If we take Europe, all the airlines losing money in winter, they all lost making in winter, and they are profitable in summer. Why? Because they have too much capacity or too much aircraft and overheads in winter. So it means that they don't need to have so many aircraft in winter, they don't have losses. So the same philosophy applies to every country. Every country has seasonality. If you have business for 12 months and passenger flow for 12 months, you don't need ACMI. You need to have your own capacity. But there are months where you have more people flying, where you can increase the prices, where you can do a lot of things to generate more money. So for these months, you definitely can add extra capacity. You don't need any extra investment. You don't need to hire people in advance. You don't need to train pilots. You don't need to buy stock of spare parts. You don't need anything. You just employ ACMI, whatever is needed during the peak. I'm not talking about AUG and some extra situations. You plan it in advance. So you know that you're going to have 3 months in a year, any month, September, November, October, with your peaks. And you, in advance, you can do it 1 year in advance, agree with the companies, get a CMI contract, and you know that in 6 months, I'm going to have 2, 3, 4, 5, 10 airplanes for my 3 months operations. I grab the cream, and I give the aircraft back, and that's it. So in this case, ACMI is not expensive at all. So we can discuss with every airline and go business case by business case, and it's really, we can prove, and Mark, you can agree with me, we can prove that ACMI is not expensive at all. So talking to the solutions of the long term. But definitely, in the current market situation, when there is no aircraft available for dry lease, the prices of dry lease is going up. Everybody is even ACMI providers, they also try to make money, to use the momentum and then make money of this situation. So prices is going up. But after we back to normal, prices of ACMI will be also very much normal.
Yeah, I think that's a good point. I think the European market, and I just want to touch a bit on it, the European market experiences a different cost of capital. So the African market is a lot more sensitive, price sensitive, with whether they're buying metal outright or whether they're taking in a short-term solution like ACMI. So those do pose different risks and different strategies with the African players. Talking about the cost of things increasing, Mr. Berthe, there's talks about tariffs, VAT increases. We've seen it around. What is AFRAA doing to engage with government entities to either challenge or support airlines through the increase in tariffs and VAT?
First, I just want to say that I am happy with the revised version of the ACMA approach for Africa, and I agree with you on that one. And I want to say that taxes and tariffs are really challenging the development of air transport on the continent. If you look at taxes, at AFRAA, we do, every 2 years, we do a study on taxes and charges in Africa. The last one was 2024. And we have seen that between 2022 and 2024, even the taxes are increasing. And West and Central Africa are the region where the taxes are higher. The good news is that last year, the head of state of the ECOWAS region has instructed the ministers of transport and finance to come up with a plan to reduce taxes and charges. They held a meeting in Lomé last year in November. AFRAA attended. So a plan has been adopted at the level of head of state to reduce taxes and charges in the ECOWAS region, starting from 1st January 2026. This is a good move because we have been talking a lot about this issue. Something is coming. There will be a steering committee. The industry will be part of a steering committee. AFRAA will be part of it. And we hope that this can be replicated in other regions. Because in some cases, we are seeing that even taxes may represent 40 to 50% of the ticket price. This is too much. Now, talking about tariffs, I want first to start giving a personal experiences when I was CEO of an airline regarding custom fees, custom processes. The first experience is that you have an aircraft on ground, the spare part arrive on a Saturday, and the customs office will tell you, please wait Monday before you clear the spare part to fix the aircraft. This is very bad because in 15 minutes, engineers can fix the aircraft and you can fly the aircraft. This is a kind of issue we are seeing in Africa. The second example, I was summoned by a custom high office one Friday afternoon, asking me to sign, to acknowledge a debt to the custom office regarding the temporary admission of 2 aircraft, requesting 50% of the value of the aircraft to be paid because they have no policy. They are just applying the one for the imported cars. Of course, I refused to sign, and I told them, if you want, we will close the airline, because 50% of the value of the aircraft is millions of dollars. So at AFRAA, we held a lab in June 2022, and we recommend to have a standardized process on customs for aircraft and spare parts. For us, this is very important. So at AFRAA, when we have information, we work with local organizations. In 2019, we worked in Senegal with the Board of Airlines representatives to lobby the government. And in Kenya, the Kenyan Air Operators Organization, the CEO is in the room. Last year we worked with them to come up with a memorandum to the government of Kenya regarding the state financial bill on importation of aircraft and spare parts. The issue will come back again on the table, so we'll continue to support the effort of the Kenyan Air Operators Organization on this issue. And I'll end up on tariff to say something. There is a threat coming, which is the new US administration tariffs. Because if you look at an aircraft manufacturer will import maybe 80% of the material to bring the aircraft, to build the aircraft. So if you come on tariffs on this, it means that the price of aircraft will go up, the price of spare parts will go up. Experts are saying at least 10%, but nobody knows, maybe it will be more. Who will pay for that? The manufacturer will translate to airlines, and airlines will translate to passengers. And as we know, for Africa, ticket fares are already very high. So it will be a big issue for the African continent. Thank you.
I think that's a good point. And, lessors will take a look at import tariffs, import regimes and the increasing in tariffs that's coming. Maarten, how do tariffs and these complex import regimes affect your appetite to lease into jurisdictions that are experiencing higher tariffs?
It does. Okay, here, yeah, sorry. It does affect, but to a very small extent, I would say. I think when it comes to operating leasing, we should remind ourselves that it is usually a temporary import of an asset in the country. What we're looking at, of course, is tariffs influencing or adjusting values, which is ultimately a concern. Having said that, we know it is mainly a challenge for the operator, as was just mentioned earlier. For TrueNoord or for lessors, tariffs are not so much, or tariffs can be prohibitive, and I think we've seen, or we are currently seeing signals from airlines deferring taking delivery of new kit. Thankfully, we haven't experienced that, but who knows what the future holds. I think there's other challenges probably related to the regulatory regime that I would like to spend 2 seconds on. We've mentioned tariffs. I think related to that is taxes. Lessors are can avail of double taxation treaties to get around these issues, but taxes remain extremely high on this continent and are causing a problem, or a challenge, I should say, for airlines and ultimately for passengers, and it will affect the demand to travel. Other challenges related to regulatory regime are jurisdiction risk, as well as age restrictions. I think airlines are limited by age restrictions to bring in aircraft and operate aircraft with lower capital cost. So this ultimately is almost an impairment on their business model. And then the last one, I think, is what can cause or what can be a limiter for airlines, predominantly is CAAs. We have seen from recent experience that because of staff shortage, CAAs can take their share time with, as a direct result, a lot of downtime. Now, this is not applicable to all CAAs, and is also not an Africa-specific challenge, but this is something I think that we need to mention. I mean, aircraft sitting on the ground cost a lot of money for the airline ultimately. And I think we need to address all these challenges, but we need to do that together. And only by doing that together, we create a more attractive playing field that ultimately will stimulate air travel.
That's a good one. And so we've heard it now from a lessor's perspective, which obviously provides a long-term leasing solution to the airlines. But it was also raised that there's import custom irregularities in the market. Raphael, what can airlines do in terms of... Sorry, we just got... You want to end it? Sorry, Raphael. Okay. What can airlines do in terms of tax avoidance? Well, not tax avoidance, tax. We don't do that here. In terms of tax optimization in deliveries, how can they structure themselves and approach a transaction in that manner?
Wow. I'm not the tax expert, and I'm not going to tell you how to do tax avoidance, definitely. Okay. Right now, well, you know, different countries have different jurisdictions, have different tax rules, different tariff systems. So there are some jurisdictions that, you know, you can bring in your assets with the least. And there's a difference between tariffs and taxes, of course, right? So taxes are more on the operational side. It's a cost item, and tariffs are more like customs duties. Okay, so really, in terms of, depending on the jurisdiction, the importer, if he's buying the asset, is bringing it, you know, as for a permanent importation, he doesn't have a choice. Yeah. He has to face it. Not to avoid it, but one flexible solution is, as Maarten said, operating lease. It's a temporary importation, okay? So also, there are some bilaterals, okay? There are some bilaterals between countries that allow importation of assets with a lower import or tariff regimes. You have to look at get yourself a local lawyer, a tax jurisdictional expert, because there might be flexibilities within the same economic zone area. You know, there might be one country in that economic zone that can import at a lower tax. You can register that aircraft in that country that has a lower tax regime or import regime, you know, and then operate in another one because of that economic cooperation. So there are ways to do that. Am I done? Okay, I'm done. He said that. So, all right.
All right. Well,
thank you.
I think there's a lot more to be said about the topic that we need to discuss. So please, we're all here, we're all experts in our field, so please do reach out to us if you have any questions. Thanks very much, John. Thank you.